About PTC Industries now, that's the next company on our radar. Third quarter was a stable performance. They've successfully commissioned the arc remelting furnace. It's one of the largest here. It's also the first from a private sector company, I'm told. We'll talk about all of this with Sachin Agarwal, Chairman and Managing Director at PTC Industries. Sachin, good morning. Good to have you with us here. Thank you for your time and thank you for waiting. Prashant this side. So commissioning of the furnace was in line with expectations which were out there. And many believe, and I saw this note from ICICI Securities that this will be earnings accretive from FY26 onwards. Could you give us a brief overview of this facility and what kind of revenues are you expecting?
Good morning, Prashant. So thanks for inviting here. This commissioning is amongst the first equipment that is getting commissioned for titanium alloy manufacturing in our new mega facility, which is being built over a 50-acre land. It will be one of the world's largest, if not the world's largest, titanium alloy and products manufacturing capability, fully integrated into a single site. Right from producing from titanium alloys to making titanium products from bars, rods, sheets, plates, all type of raw material products, castings, forgings, the entire value chain, manufacturing supply chain that is required. The first commissioning of the VR is very, very historical. As you said, it's the first time any private company is producing this at this scale in India. We already have order backlog already in place for this. Order bookings have started. There is a big gap in the world in terms of titanium supply chain, especially given all this Ukraine and Russia thing that's happening worldwide, which is created for the global OEM for aerospace, a big challenge for sourcing titanium and titanium products. So this is filling a very big gap in the industry, in not just in India, but also worldwide. There is also a big value addition that we do, right? From getting in material from almost 800 rupees a kg to selling products all the way up to 1,50,000 rupees a kg. So almost between 10x to almost up to 100 to 150x increase in value addition. So, and everything in between. So it is a very, very mega project in that sense.
No, that's very, very interesting to hear, and I would love to chat more about what all this goes into, etc. But we're a little short on time this morning, Sachin. Could you tell us what is the at full capacity utilization? What's the revenues this will generate for you, and margins as well? Yeah.
Okay, sure. So if you coming to the margins first, if you see our previous quarter and the previous financial year, we are at around 30 to 35% EBITDA margin currently. Without this new facility coming in, the revenue for this year, we probably will be around 40% growth in the previous year. The next year, we will be around 100% growth. The potential revenue from this is at least 10 to 20 times our current revenue. When it reaches close to full capacity across the entire thing, from titanium materials and superalloy materials to superalloy castings, titanium castings, forgings, and all products that are getting made there. So the total revenue potential for this site or for this company is between 10 to 20x of what it stands in next 5 to 7 years. The EBITDA margins are going to grow even further. We are at around 30-35%. I think it will remain at least at that, or potentially grow to somewhere closer to a 40% EBITDA margin.
Mm-hmm. So revenues were 250 crores, right? Last year.
Around 270 crores, yeah.
270. You're saying that will grow 40% this year?
Yeah.
And then
30 to 40%, yeah.
30 to 40% in 25, and then it'll grow 100%. In 26.
627.
Yeah, and this from this particular commissioning, you're saying your current revenues can grow 10x, 15x.
10 to 20x, yeah. From this alone, yeah.
Wow. And this is over what period of time?
Between 5 to 7 years. This also includes our acquisition in abroad in UK. We have acquired another. So we're completing as I said, I think as you probably need a longer conversation on this, but the entire supply chain is being covered. We have acquired a company in UK called Solutions, which machine airfoils for aero engines. This is the technology which is not being provided to the country for a very long time, especially in even the current deal with GE. So it machines airfoils, coating, drilling, all the work that is not being done in India. We have acquired that company. So it gives us a very long run on the entire value chain. And that is the target of the company, to complete all the technological and capability gaps in the country in the metal-related sphere. So yes, between 5 to 7 years, quite a large increase in revenue.
So it could be about, I mean, taking last year's number, it could be in, this alone could be about revenues at full potential could be 2,700 crores more, 3,000 crores from this commissioning.
Yes,
7 years out.
More.
Okay.
Mr. Agarwal, so that's a 7-year projection from this one facility that you've, this one process that you're just starting. But I want a slight more near-term view. You said next year growth is going to be 40%. Say over the next 3 years, what is the CAGR? Because you're in very exciting segments, and also throw in some more light. I believe that you've done an MOU with the UP government in the new UP defense corridor, and you could be involved in subsystems or parts. So some of the Su-30 components as well. There's a MOU with the Odisha government for aerospace-grade titanium sponge. So these are all very, very exciting sectors to be in. Just tell us, how much are you expecting from the Odisha MOU and which year? How much from the UP MOU and which year? Tying into my overall question, CAGR growth for the company, top line and earnings, profits for a 3-year period. Do you have that projection right now?
So coming to your MOU part, so with the UP government, the MOU was almost a couple of years back. Now there's the plant that I mentioned about in the mega project that's going on in 50 acres is in the UP defense corridor, right in front of the BrahMos facility in Lucknow. So that's already ongoing. So that's where we are having these major investments going on. And I expect all the commissioning and all the execution of the work is going on very well and actually ahead of time. So we'll probably be by end of the next year, all this will be commissioned and in production. So that is where we mentioned about the existing potential for the growth of revenue. The Odisha government, the titanium sponge, we have just signed an MOU. All the financials and everything are getting worked out. All the details of the policy and what incentives we can get from there are being worked out. Just talking about the MOU with UP government, we have got a 25% capital subsidy scheme has also been introduced in the aerospace and defense policy. So there will be a good incentives that will be coming to the company as well through that policy. The CAGR part, what you mentioned, as I mentioned, this year will be around 30 to 40% growth. Next year, about 100%, then probably another 50% to 60% growth after that. So if you're looking at an average, probably a 50% CAGR for the next 3 years. 50 to 60% CAGR for the next 3 years. 50
to 60% CAGR growth next 3 years. Got it. Thank you very much, Mr. Agarwal, for joining in with that conversation and outlook on what you intend to do as well with the business.